Okay, good day, folks. It's Andrew Cardwell back with my daily five. And before I get started on mine, I wanted to make mention that Bruce Fraser and I did a power charting yesterday, and it wasn't all technical. It was more conversational piece with what we had learned and picked up over the years, in addition to the technicals, the little tricks of the trade or experience that you learned from that you wanted to share with others. So that should be posted today on StockCharts, I think about 3:00 p.m. Eastern. In the YouTube, just look for Bruce Fraser or Power Charting Bruce Fraser. And Rachel's going to send me a link. So if you can't find it, send me an email, cardwellrsi@gmail.com, and I'll get you the link that I have so you can see it. But starting off with today, yesterday's close was a monthly close, and I always enjoy the monthlies. Sometimes I get real excited because we had one last month, I guess, was monthly, daily, or monthly, weekly, and daily all on the same day. And the reason I like them is it gives you a perspective of what that price looks like on all three time frames. And most people are so caught up in their trading, they only want to follow in the short-term trading. But always remember, short-term is just during the day, 15-minute, 10-minute, 30-minute. You're just looking at the noise during the day. The actual trend is influenced by one time frame longer than you're trading. So if you're trading short-term, always have an idea what the trend is on daily. If you're trading daily, what's your weekly? And then the monthly, the reason I like it is you get to, like I said, you get to see what that price level looks like on monthly, weekly, and daily closes. And it can be very helpful in what you're doing. So as of today, the first one I put up here was a monthly on the Dow Jones. And we had divergence long-term from the highs back in 18 through the most recent momentum high in the Dow. And that got it up to over 70. Then it come down. If you look at this middle chart, and you'll see it sold off, come back. You had another monthly divergence that was only 2 periods apart. And some of the strongest signals will come from the first high to the higher close with lower momentum, the bearish divergence. But I've noticed over 40 some years, the strongest signals come from the tighter signal or tighter time frame. In this case, it was only 2 periods apart. And also, one of the other things I've shared with people is when you get a bounce in the RSI back to the moving average, you can't get above it. I call them head bumps. Well, this was a head bump, a 2-period signal, and then it reversed a little on the month through the month, and the next month down as well. Let's look at the weekly. Same type of thing. You had head bumps up against resistance of the 45-period moving average of RSI. And that rally there only carried to a 60. Those of you familiar with my range rules, 60 and 40 is the bear range. 80 and 40 is the bull range. Well, this put it in a divergence, a head bump, and stopped right at 60 on the weekly. So we'll have the weekly close tonight, but I thought it was quite interesting with yesterday. It gave you an idea or a little clue in that, not the 360, I don't go to 360. The daily chart yesterday also came up to an RSI just above 62. In fact, it had gapped higher, finished up, and then immediately started to sell off the next day. But that last hour yesterday, I did watch the hourly chart. It fell apart in the last hour, the Dow, the S&P, and the NASDAQ. So it's showing very subtle action, and it's not only overextended, that there's a lot of sensitivity by traders. They don't seem to be holding positions very long. And that could lead to an intermediate type trend change, which I've been expecting. The other thing on everybody's mind is the crude oil and the gasoline prices when you go to the gas station to fill up. Let me take a look at crude, because I think crude, our targets were hit above 120. We were long from under 70. And the breakout above 90 forecasted the target we had at 120 to 125. So we exceeded or achieved those levels, and we've had two shakeouts. But if we look, we may have just a new trading range. There's crude oil daily. So we've seen the action where it's corrected from the big highs, then a rally high, and then back to what I think is going to be support. Let me get didn't even have my daily up because we had a strong move down this morning, but I think it's going to find support and continue to trend back up. So I'm still long-term friendly and bullish on crude oil, on gasoline. It's going to be painful, but that's part of trading. You never know what you're going to get. It's like that box of chocolates from that movie with Tom Hanks. Still positive, and especially, like I said, with it being a monthly close in here, we could take a look at monthlies. And if you notice, when I talk about range rules, I watch that 9-period moving average on RSI. And first you get the RSI to break 60. Now we're starting to see the moving average 9 of the RSI break 60. That's the start of initial acceleration, which was way back at $84, $85. Once it went above 85, it told me high confidence, high probability we were going to see at least 110. And we exceeded that, going all the way up to above 125. And the weekly, which we'll see the close of tonight, we had a shakeout. We're pulling back to the 60. The RSI is trading right now around 61. With previous 80, it was about 89, and now it's at 99, almost 100. So we could exceed that top side. That high close on a weekly back there was 113. The actual intraday high was up around 125, but you're looking at almost a $10 difference. So on a longer term basis, this just looks corrective on the dailies. But in lieu of that, quick look at the dollar index. Still strong, and it's been strong even before we've seen the Fed talk about raising interest rates. So I think we've got, this is still positive. Moving averages are still moving positive. I do expect to see a half point like I think everybody else is. And I think that's why we've seen the move up in the last couple of weeks. They're talking about maybe 2 50-point moves by the Fed. So I think the markets keep the talk of it. I think traders are realizing that interest rates are coming, giving strength to the dollar index. But I think it's also going to give us some input as to the stock indices. They may have anticipate now a 50-point move, but it just to me is making the stock indices very, very people that are trading those very anxious, because if they start to raise these rates, I think the stock indices may be the one that's going to be hurt a little more than the others. Still positive on gold and silver, still positive on coffee and the commodities. But I think we are at a key point in time where probably over the next week or so, we're going to see the stock indices start to confirm that we may be seeing a intermediate type trading top. S&P, Dow Jones, gold. We can take a look at gold. Still positive. Still minimum target I'm looking at is a break of the highs that were made earlier, almost 2100. I think we're on our way to 2250 and higher. Silver can go to 40 and higher. We look at the weekly chart, still positive. In fact, my initial upside acceleration rule, I'm starting to see the 9 period on a weekly chart go back above 60. I see 1928 close there and 1893 there. So that's at least $30, $35 added to the high. So somewhere in the neighborhood of 2050 to 2080. So we're starting to see positive reversals and good support come in at higher levels on the RSI. I mean, these previous lows, we could not break below the rally highs. Previous tops become support. Previous resistance is new support. And coupled with a positive reversal on this weekly, yeah, I can see 2100, 2200. Silver, like I said, the same way. And the commodity prices, just be careful as to which one, which market you're in, which future. I think wheat's still positive, soybeans, cotton, hogs, cattle. These are necessities outside of what people are having to save or having to keep in their wallet to put gas in their car. Their grocery store prices are going up. Trust me, I'm going through the drive-through. I like Zaxby's chicken, and I get a salad, what used to be about $17.50. Now, because I'll get the salad and chicken fingers, now it's like $24.50. So we're getting hit in the wallets in commodities, inflation. Inflation is real. It's not over. We still have more upside on the inflation side. But if I can help you in any way, contact me direct, cardwellrsi@gmail.com. I'm on Skype at Andrew RSI in Atlanta, Georgia, USA. And if you can't find the power charting that Bruce and I did yesterday, it was a lot of fun because we talked about, things we had been through. And we got the gray hairs to prove it. So drop me a line. And if you can't find it on power charts, power charting on StockCharts or YouTube, then just drop me a line and send you the link. But be careful because things may not always appear as it may not be what they appear to be. The stock market to me has lost a lot of momentum. It's being stretched out, and the commodities still, they've had some violent corrections, but that's part of the volatility. I had said all last year, this is going to be very volatile this year. Very interesting. Be careful, be smart, have discipline, and follow your rules. Take care, and I look forward to speaking to you again sometime soon. Thanks for now. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.